to be here.
Yes, we did talk about oil earlier this week, and it started off like it was going to be quite bullish. But it is looking bullish, somewhat.
Yeah, I mean, right now it's very difficult to really tell where oil prices are going, but just simply because of the swings that we have seen. But like I had mentioned on Tuesday, the dynamics right now for both supply and demand are not necessarily unchanged from what they were. So pretty much right now, in terms of supply, we're still seeing Russian oil, significantly, being the market.
So it's still a tale of oversupply.
Exactly. OPEC as well. The market sentiment around OPEC planning to increase supply cuts ahead of October is still very much underway, and the markets continue to price that in. And then on the demand side, we're seeing a lot of stockpiling from top importers like China. And what that means is that there are prospects for demand to also slow down. So pretty much on the supply and demand side, we're seeing oversupply, and then there are chances that demand could, decline, and the supply factors right now outweigh the demand factors, and so there are chances that oil prices could slip further. And I think on Tuesday I did mention the average right now that we're looking at oil prices touching is about $60 per barrel towards the end of the year.
$60?
Yeah, $60 per barrel.
Well, we're still looking at U.S. demand. Prospects for that still looking, quite weak. Who's going to step up if U.S. demand is weak at this point?
I mean, U.S. demand, like you mentioned, is weak. China's demand right now, prospects for that also slowing down is also really high. So like I had mentioned, it's just, right now it's just like a situation of wait and see to really see how the market moves. But there are other commodities, at least energy-related commodities, that right now are looking up, and that's LNG, and that's because we're getting into the winter season. It's really cold, and so there's heating demand rising from Europe, Asia, and also the US. So pretty much, even if we are seeing that there's a decline there might be a decline in oil prices, we might see LNG prices increase, and that would support government revenue, at least for Nigeria.
So I guess if you're a trader and you're not really having fun in the oil market, you should just go to LNG. At this point, maybe go long.
I mean, to an extent, just simply because of the dynamics that we are seeing right now. And I think one other thing to mention is some of the issues that are currently happening as well in the US, and how that is also, somewhat affecting market sentiment. Yesterday was a very sensitive time in the political space in the US, and we are seeing that somewhat rattle the markets. Oil prices, to an extent, kind of responded to that because of Trump's involvement. He did make a comment on the situation, and that's the Charlie Kirk situation that happened, very sad situation. And that, to some extent, which is very interesting to see how the markets are really responding to that, even though we think it's going to be temporary, but it's worth mentioning because now we see how that strong interconnectedness between the political economy and the macroeconomy and the market are very, very intertwined right now.
Yeah, so much focus on politics, economy. It's never been this much.
Yes. I mean, we're living in uncharted times. I think one of the things to just also mention is we're getting very close to the U.S. Fed's meeting, which is scheduled for 16th and 17th. So the markets as well are anticipating what the U.S. Fed is going to do, which right now there's a 60% to 70% chance of a rate cut. And if that happens, we could see the U.S. dollar weaken. And if that happens again, we'll definitely see that have some impact on oil prices.
And I'd like to see President Trump's reaction once we get that rate cut, because he's been calling for that rate cut since January. And maybe he's finally going to have it, but will he be satisfied with Fed Chair Jerome Powell?
I mean, we never know how things are going to play out there, but what we do know is how the markets are going to react to that and what that means for emerging and frontier markets. If the U.S. Fed decides to actually go ahead with the rate cut, we do know that right now African central banks to some extent have been a bit dovish, and in between, retaining their, retaining their tightening stance. So we have seen, for instance, the CBN retaining its, retaining its rate. We have seen, I think, the SARB retain its rate as well, even after several rate cuts. The Ghana Central Bank as well. The expectations that are going to hold because of the way the cedi has moved over the last couple of weeks. The Kenyan Central Bank as well, they've cut rates in August. So we are seeing that somewhat dovish and tight monetary stances across the board. And so we might see a change if the U.S. Fed decides to, actually cut rates, but how currency movements, how different currencies move will be a major, determining factor, at least across emerging and frontier markets.
And, talking about currencies, we're seeing the Naira.
Yes.
Your slide there shows that there's been some kind of pressure.
I mean, just temporary, but we have seen at the official market Naira right now, that's the CBN's end frame rate trading at around 8,500. So it has actually appreciated, and we're seeing the parallel market also kind of move in tandem. So the convergence between the official rate and parallel market, we're seeing that stronger convergence actually happening. And this is again on the back of the central bank, retaining and making sure that reserves are higher. We're seeing FPI inflows, significantly increase. FDI inflows, I think I mentioned this on Tuesday, we still want that significantly increase, but pretty much on the investment inflows aspect, we are seeing that inflows are coming in pretty strongly, with oil production also rising. We're seeing oil receipts, prop up. And remember that I mentioned our LNG prices globally are also increasing, so there are chances that LNG exports as well will support all government revenue, and that would somewhat supports the accretion in reserves, and that would continually reduce, number one, speculation in the markets. So markets right now, market sentiments are in the expectation that, the Naira will at least continually remain stable. And if that is the prospect, it means that business confidence is, higher or at least stable as well. There's, positive implications or positive expectations for the end of the year, and that's good prospects for the Naira. The only risk is that we expect demand to also increase towards the end of the year, 30 December, all of that coming up, and we do expect that to be some pressure on the Naira. But with the ample reserves that we are seeing, we expect that the CBN is going to do what needs to be done to ensure the Naira remains stable even towards the end of the year. I
guess we'll start looking at milestones for the reserves.
Of course,
at this point. Yes. So definitely we've seen the 5% fuel tax that's been put to the side.
Yes.
At this point, I guess we can all heave a sigh of relief.
Yeah, I mean,
somewhat right now.
Yes, I would say this is one of those situations.
So when I'm buying fuel, I'm not paying tax.
No, you're not.
Right.
But I guess this is one of those situations where I guess the markets didn't quite really understand, the tax imposition in itself and when it was going to take effect, and what that simply meant for the price of the commodity and how the implementation was going to go. And I would say two things. It's split in the sense of communication. So there we see that huge trust deficit between the government and people really played out there, where even something that could look as though it's going to be good for the people eventually might end up becoming bad, just simply because people didn't quite understand what it is. And now let's go to what exactly it is. So this tax is something that has been in existence since 2007. It has just not been implemented, and that's because the government have been paying fuel subsidies. So now that fuel subsidies are out of the way, there has to be some level of revenue to fit in some of the government's road infrastructure projects, road rehabilitation, because that's where that 5% tax is supposed to go. Now, looking at the implementation, it's not supposed to take effect until January, when all the other tax reforms are happening. So it was, I'm sure, because it just came up almost as though it came out of nowhere. It was almost like, oh, they want to increase prices again. And then now let's talk about the implementation of the 5% fuel tax. The plan, at least from the Minister of Finance and the chair of the Fiscal Reform Committee, we have heard from both of them that it's a situation where it's going to be targeted at times, or at least at certain periods where prices is stable. Exactly.
Good times,
exactly.
Turn it on.
So we include that so that the prices do not skyrocket and then increase the burden, increase the payment burden on consumers. So what that looks like is, in practice, periods where the price of the product is probably either reducing or has been stable, we could have that tax implemented so they're able to generate that revenue. Again, I do think that's it's a situation of where people are consistently sensitized and informed when this is going to kick in, how it's going to kick in, and at what point we should expect an increase in price, or if there would even be one when the tax is implemented. So again, I think we would likely see all of this interconnectedness between the political economy and how the people really feel, and that gap would only be bridged through proper communication with the entire country.
Fantastic. I just hope it's not going to be about the data. Maybe the data is positive, but the people if you look at your pocket, it's not positive. I hope it won't be that kind of situation.
We hope so too.
Yes, that we actually turn it on at the right time.
Yes.
So that we don't stoke inflation going forward. What do you see in domestic commodities so far?
Right now prices are pretty much mixed, but there's somewhat of stability. I think every time you ask me this question, I'm always very happy to talk about plantain.
Yeah.
The price of plantain right now is still very much good. I have a very big bunch at home, so I'm very happy to.
How much you buy that one?
I think I bought it about 7,000 or so.
Wow.
Yeah,
that's a lot.
I mean, we're coming from 15,000, 16,000, and I can get that big bunch for 7. So yeah, I'm happy about that. Looking forward to getting it at 3,000. So where that was where we're all coming from, but pretty much we are seeing like certain commodity prices actually reduce, which is good for us. If you even look at the screen now, you see that the flour prices are down, and that's because globally wheat prices are softer, rice prices are stable, garri prices are down, cement prices are stable, tomato prices are down. Tomato is a very interesting one, and remember we're in the harvest season for some of these commodities, and so we do expect prices to still remain stable for now, or at least even go down. So this is the period where we'll see a lot more stockpiling for people that are planning ahead of December, when prices are gonna pretty much come because of high demand festive season period.
Right. So much to look out for, and we'll definitely keep tracking those prices. Thank you so much, Dumebi Oluwole, Manager, Economic Research, Financial Derivatives Company.
Thank you for having me. Yeah.